Hello, Warriors. How's everyone doing today? I hope everyone's having a decent week. This is Coach. I want to start off with the VIX. I've been talking about these wicks that we've been getting to me, which smack of accumulation in the VIX. Certainly this morning, I did not see a trade. If you have a tick chart, maybe you could see how many trades really are happening on this VIX. And I really, this is bottoming type action when you continue to get this stuff. In fact, NASDAQ finally got to the beginning of my targets for a high at, they're there right now, 14.3. I'm figuring between here and 14.5 that we could terminate this third drive on a fractal. But I just want to show you how we're acting here on the VIX. Here's one of these. Maybe there's one more. As you guys know, I believe in things coming in threes. So here's one and here's two. Maybe there's one more washout into the end of the month. But I would join whoever is buying these wicks down here and possibly take some long-term call positions, the 20 strike, something like that, not something too deep out of the money. In fact, yesterday I started to lay out bearish positions on the market by um, beginning to accumulate vertical bull spreads in the SQQQ. We're at 1.27. Probably is going to test it, but we are diverging. Maybe we go to 955. There is another fib extension all the way down at 878. So um, I wouldn't be happy about that, but just starting, actually going out to December, buying time. The specifics of the trade I've laid on is long the December $12 calls, a vertical bull spread, short the 22s for a 70-cent debit. And at 22, and I know you look at this and it seems a long way away, but take a look at the daily and you'll see how I come up with this call. Initially, I think we're going to have some trouble here. First target up around 16 bucks or 17 bucks. At once we take out 13.20, you just tack it on, you could get there. But if you look all the way to the left, okay, you see this gap here? So that's my target. Low of that gap is 2305. So I know that, right now, the things always look the worst at the bottoms and the best at the tops, but I've been waiting for this 14.3 for a while. We're starting to get it. Um, Short-term stuff still has not blown out the divergence here. See this? So we have 1, 2, 3, getting a little throw over here, but diverged on this high that we're getting right here. 2 hour trying to blow it out, but hasn't yet. So we'll see. We could still extend. Remember, I was talking into month end, so we still have another week left in this month. Maybe it's just going to blow off into it. We'll see. But, I'd rather be a little bit early buying time on this strategy than be late. So scaling into that as well. I want to start off with currency wise, a live call that I made on the air yesterday. And also in the chat room was a short in the Euro Aussie, which usually goes down while there's still risk on. You could see here it held this 200-day on the 2 hour underneath this low. I think we go a lot lower, but you never know. So if you took the trade from 43, you have about 70 pips here. I recommend you take half off right now. Trail your stop to BE, and if you have a breakdown for additional pips, you're still there. And if the market holds this level and rallies with some risk off happening today, you've made money and you've taken all the risk out of the trade. So that was my only live call. I made another one today. We'll see. I'm right now down about 9 pips. I'm trying to buy this pullback in Canada. We had this, we're about 50% back right here. We had some divergence on the 15-minute chart. Not exactly ideal, but I think between here and 22 and a half that it's worth a shot. And it ties in with oil, challenging and getting ready to make new highs. I think we just did it here. Yeah, new highs in the crude oil market. That's also firing up the markets a little bit. But, when Canada was in a real weak position, it was making new lows without WTI making new highs. And just think about it, step back a little bit. And here's WTI making new highs, and USD CAD is still uh, 250 pips above the low that it made just a week ago. So trying to buy this, viewing this as a correction. We did have confirmed highs up here. See this reading? So I know a lot of people think that I only look for turns and divergences, but there are other ways to use the RSI. And one of the ways to use it is when you have a confirmed high. Um, the probabilities are that is just a high, not the final high. Markets rarely peak with momentum confirming price. They do at times, and that's a hook that sometimes it could uh, not be a great guide because there's exceptions in any kind of methodology you use to trade, and that's why you use stops. I would throw in the towel in USD CAD under say a 120 170 close. So I'm willing to risk 100 pips for the possibility of maybe 250 300 taking out this high, which is supported technically by, look at this Mo. We had a reading of 84 here on the 4 hour. Let's see what the 2 hour did at the highs. Even, we had a little divergence here, but still pretty high readings. Markets usually don't top when their readings are near 80 as well. So, and look how oversold we've become just by this little pullback that we're getting in the market here. So that's a new trade I put on for today. Remember, it's okay to be wrong. It's not okay to stay wrong. And I'd say getting back under this candle and this prior high right here, this was the breakout right here. I'm not going to trade it all the way down to the breakout. So, you come up with a stop, a market stop would be back under this low at 2160. Okay, this was the Fed. All right, this was the Fed and the continuation move. And so now we'll see if we could try and set up some type of low. 22 and a half was a target of mine from the long at lows, and I got out before the Fed, and we had another 200 plus pip rally after the Fed. So trying to re-enter this on the pullback down about 16 pips right now as oil is making new highs. So taking a look at the euro, to me, this action that we're getting in the euro, I still think is corrective. I still think there's more left to the downside in the dollar. I'm keying us in the Dixie right around this 9140 level. It's another 17 points from here. Should hold. Look how oversold the dollar is getting, and we haven't even really pulled back halfway yet. So it's my contention that there's another push up in the dollar um, before we have new lows. In fact, I'm in the camp that after the Fed and what happened after the Fed, that this higher low is going to lead to 95, 96. So to me, this looked impulsive. And right now we're getting a 3-day correction off the close that we had from Friday. So I flipped around from selling dollar strength to buying dollar weakness. I think through the summer that's going to pay. Where am I wrong? I'd say closing back under 90.40 that this breakout would be negated, and this was just another false signal in a downtrend. And then we're probably going to make new lows and head towards 88 and a half. But this is the evidence I have that I have to work with, and this was the Fed, and we're trying to correct the Fed right now. Yields, are starting to act more and more like we might be getting a short-term bull flag here. You know, we had this spike down. I believe this was Monday and started moving sideways. So perhaps we're in some kind of flag formation. Again, getting back over this high, 158 is going to trigger quite a move in yield. So the 4 hours looking pretty good. And you guys know that, this, I was looking for 130 when we were trading in this range. And, 135 and a half is close enough for government work. So we'll see. We had a pretty good bond rally. Um, Maybe it's terminating here and we have one more shot down in rates. If that happens, even though people are gravitating towards big tech again, higher rates are not going to be healthy for most like FANG stocks and some of the monster NASDAQ stocks in the NASDAQ 100. So watch your yield chart if you're a NASDAQ trader and hope that yields have not ended their retreat and that maybe we're going to 130 to 110. I think that would extend the tech rally. But if we're turning right in here, after the whipsaw action that we had in the Fed, this was the Fed, okay, Fed, and then negated it. And here again is a two. Maybe we're going to get a three drive, but this was Monday, and since Monday we really haven't given up much ground. And let's call 157 a potential breakout of the 10-year yield. So that's 20 bips from the intraday low here, and 20 pips from here takes us back to the high to 176, which is right here. 177 and a half. So it would take us right back to the highs. The other scenario is that this low fails and we're still going to see 130, 120, something like that, which I think would extend the bull market further than right now I think it's going to go. I know I was talking about the potential of 4,300 in the S&Ps, and the S&Ps actually failed to make a new high yesterday. Yeah, we could still get it. There's still some time left in the cycle until the end of the month. I believe the end of the month is next Wednesday, so not that many trading days. We'll have 5 trading days left for any other business to get done to the upside in the S&Ps. And NASDAQ looking like this, if you look at the daily RSI, we're diverging against the highs that we had here, and we're diverging against a second drive. And remember, yesterday I broke it down as a fractal for a three drive within 2 and 4 hour time frames. And, we're still working on the three. So last time we had a big break in NASDAQ, it took a few weeks, 1, 2, 3, before we headed down. So, we could be in the second week of this right here. So anyway, it's a top pick. I'm doing it with managed risk. It makes me also want to accumulate some type of VIX product. I mean, it doesn't look great on the weekly, but I keep seeing these types of, look, we cleaned out a lot of lows. This is actually a new low for the move in um, the VIX in quite some time. But, really think about it. Well, we're making new highs in the S&Ps, and it still is a completely different regimen from what we had in, before COVID. So, we're not seeing anything underneath the teens again. So, to me, this looks like a higher low in the VIX. In fact, it's the third higher low. Here's one, here's two, it's the third higher low. And, I could almost make a case for we could have something like this. I know most people, 40 would be a reasonable target if we get this correction. Anyway, I think there's potentially in the middle of a hot, dry summer, a rainmaker to the downside in NASDAQ tied to higher yields. And that's my call, and I'm sticking to it. Looking at what's happening in the dollar, similar situation here where We have this inside week happening here, and we're headed towards this 91.44 level. So we'll see how much weaker the dollar can get. Canada still under pressure now at this 22.5 level. Let's see if it's blowing out divergence. It isn't. I may end up adding a little bit here. Euro Aussie is breaking down as the market retreats. I would just go the door here. You have 75, 85 pips from the call at 840 yesterday. Let's just go the door in case this rally fails and the S&Ps and NASDAQ. Nice trade. And and finance a losing trade so far, the drawdown in Canada. So, I put something, when you put a winner in the bank, this business is so much about psychology. And, if I hadn't have had a great trade going into Canada, probably would feel a little bit more pressure. But it's nice to have a cushion going into your next trade after booking a winner. So we'll see what happens here in Canada. I may add on. I'd be surprised to see it close back under 21.80 as I was showing you earlier. So here's Euro Pound. We actually did take out the 78.6 level, not confirming. It's tempting. Let me look at this. So here's my blue speed line. Um, I'm not ready to commit on this either. I know some people are talking 83 and 82, which would mean taking out these lows. This sure looks corrective, but pretty deep correction after this rally with no follow through. Um, I'm leaning towards buying it, but I'll keep it in the IDK category. And IDK category to me is I don't know. Again, here's the oil market at new highs. I'm sure it's supporting this, but I can't be long crude oil anymore. Look at this 4 hour. Okay, so we've been diverging for a while up here, and I know, I think I saw the DSIs at about 80 in the crude. So, I really have a crude trade on with USD CAD being the proxy for it because, if crude sells off, it's going to support this pullback in USD CAD, and CAD will make another move to the upside. I think we got some weak retail sales out of Canada today. There was some data that I don't pay attention to because people buy headlines today, sell newspapers tomorrow. Gold, nice pop. I was looking at this earlier. I was thinking that we might have a third drive here, but I was looking at it off the two. And here's something to keep in mind if you like this formation. Gold looks pretty good. Probably the next trade is going to be a short side, maybe back at prior support, new resistance. It's an IDK here. But remember, I was talking early in the week about a potential three drive. When a market begins to stretch it out and there's not symmetry between the three drives, and it doesn't have to be exactly symmetrical, but you see the space between these two drives here. Once it started moving sideways and sideways without another retest or a third drive, that came off the table. Right now, it kind of looks like we have a little bit of a breakout at this 92 level. So if we take it from the low of the move, and I'm not trading it, but 1760 to 92 is 32, could give you 1820. Okay, so I'm still think there's one more selling opportunity. So if the dollar keeps weakening and gold keeps rallying up towards 1820, to me that's a sale. Um, Same in silver. I mean, this was a huge breakdown. I haven't even done the fibs, but there's going to be a place to sell silver. I'm still not convinced that even though we're getting a bounce, look at how this daily 200 day, it's sitting right on the 200 day, and we're getting a bounce. I'd be a seller up near $27 if we had that. That's another 80 cents. Looking for the recent lows to be taken out. and then a big stop hunt happening under this level right here at 23 and a half that could take us to 22. That's still my view on the precious metals. Um, Gold silver ratio still moving sideways. I think it's going to break out, then I think it's going to fail, and just very stable gold silver ratio here. Um, my gut tells me that it's going to head up, because I think if there is any kind of sell-off in risk, that there'll be a flight more to gold being a monetary hedge than silver being more of an industrial precious metal. Everyone with me? Give me your wife. You are? Hey, Daniel, how you doing today? Mike, how's it going? G. Dory, how are you? Okay. All right, so let's just keep moving on. Um, NASDAQ, you guys know what I'm thinking here, the potential three drive S&Ps. How can you get excited about something up here? So, I think 3,800 is a possibility. And then here's my, secret line that I shared yesterday in the NASDAQ. And this is my longer term target for NASDAQ once the correction, if the correction gets underway down around 10,000. And in the S&Ps, you could make a case for initially 38 and then 33 and 3,000. I think this is a possibility. So all it is retracing back to the election from last year, back to November's lows. So, it's not the end of the world, although it'll feel that way to people in very high beta positions. Um, Looking at, let's look at this. This was pretty amazing yesterday. So, a lot of people calling this a breakdown. You still could say it, but look at this stop hunt in crypto that took place. And I was asking some traders I know if this changes their short-term view. It didn't, but I've seen these before in other instruments, and it's pretty nice. You got every long stopped out here, right? So where are the stops now besides under yesterday's low, last night's low? So let's take a look at the week. And I know it's hard to say when weeks are over. I think Bitcoin, the week doesn't end Friday. I think it ends Sunday. It's a nice little potential reversal here, and a lot of people have gotten disillusioned with it. So that's not a bad looking candle. I know guys still looking for 80,000, and this is just a four, and we're going up. Um, Same with Ethereum, kind of double bottomed here. And one of the unknown market wizards, John Netto, I know him. I've interviewed him. I talked to him. He actually made a very bold, aggressive call. And he said that even if Ethereum retests this low, that he actually has year-end targets for Ethereum. So buckle your seatbelts. He's talking 7K Ethereum by year end. And, I didn't call him a wizard. Jack Schwager did. So, that's a pretty extreme call, but that may have been a great area to be long. I mean, if it goes back to 4,000, it's a great trade. I'm just telling you, quoting John Netto in an interview I did with him, and we'll have him on here at TGH2. So, um, here's a look at a couple gold shares. They're trying to hold here. I don't think we're going to new highs. I think there's going to be a great buying opportunity in gold more towards late summer. Maybe GDX ends up down here at 27. Some type of ABC would be a great time to look at the miners. Same thing with Newmont. There's been some pretty good damage done here. Be nice to be able to buy Newmont down here at the sub 50 level. on a pullback. This range, I mean, why can't we break the bottom of the range by a certain amount, just like we broke the top of the range, which ended up being a bull trap? So I still think it's you have time before you start stepping into the minors. And I want to make this point again, even though there are a few holdouts, stock indexes, but the metals took a hit. Almost everything took a hit last week. So remember the narrative of all one market, and since COVID, everything went up together. You know, gold since COVID, right? S&Ps since COVID. So if everything can go up together, everything could pull back together. The difference will be magnitude, just like there was a difference in magnitude in the advance of S&Ps compared to gold. The corrections can also have different magnitudes. I would suspect that this time around that gold will hold up better than stocks if we get caught up in something. And something else hanging over the FANG stocks that if you ever want to screw up an industry, you get government involved. And there is a lot of antitrust movement with this kind of politically wokeism, and I'm in the middle, I'm kind of a libertarian. Anyway, uh, the Democrats, SEC, Gensler, and all these guys, they're going to break up. They're going to attempt to break up these companies. So there's some regulatory risk on this big tech. So I'd say the two risks for big tech, regulatory is probably bigger than higher yields. So I just want to let everyone know that's part of my fundamental thesis, and want you guys to be aware of it. Now, uh, the half hour is almost up, and I just want to let everyone know that I have a great interview with a buddy of mine. His handle on Twitter is @thePivotKing. Steve's in Toronto. I think he grew up in New York, and the guy has a huge following, and he's excellent. And I really think that you guys are going to enjoy hearing me talk to Steve. And I'm going to talk about, he's successful now. I want to know what he went through to get there. I want to know if he got kicked in the teeth as many times as I did trying to learn this business. So, be here in TradeGate Hub, or you could watch it live on YouTube. But I do have a great interview planned for tomorrow. And, like I say every day when I end a broadcast is, don't just count your pips, count your blessings. Money comes and goes. Time is gone forever. Make it count. And thanks for your attention, everybody. And I'll see you tomorrow for our interview day. Good hunting the rest of the day. Adios.